So today's a big day. Today I'm going to be telling you about a new stock that I've been buying. I started buying this stock last week and I thought I'll let you guys know on the YouTube channel that this is a new stock that I've added into the portfolio. Obviously, as a long-term investor and with someone that has a bit of a condensed portfolio, it's not often that I add in a new stock, but I decided that this has got to a point where obviously it's quite hard at the moment because there's so many opportunities out there in this stock market crash that it's kind of resisting every opportunity. But this one for me finally got to a point where I was like, okay, like the risk to reward, the risk is there, but it's quite a slim risk. And then when I look at the reward and I'm thinking, okay, the reward though is quite big here and I've got to have a shot at this one and build up a position in it. This stock for me is going to be a bit of a mid-sized position just because of the industry that it's in, but it's not that high risk. But like I said, I'm not building it into a big position. It's going to sit about mid-portfolio for me and I think it'll be a nice mid-sized position. Also, as you guys know, I can be very diverse in my investing techniques. So I'm happy to go for dividend stocks. I'm happy to go for value stocks. I'm happy to go for growth stocks. I have quite a diverse portfolio and risk management. And this one kind of sits in the category of, it doesn't pay a dividend. So it's not a dividend stock. It's more a value stock, but it does offer quite a bit of growth. So it kind of goes in the mixture of value, but with quite a bit of growth as well, but not a pure growth play. It does focus on profitability a bit nowadays. So yeah, we'll take a look at this stock and see what it is. So if you want to know when I'm buying and selling companies in real time, and you would have known last week I started buying this stock, the place to be for up-to-date information is on the Patreon. Link is in the description. There's also 2 exclusive videos a week on there. And if you do want to start buying this stock, there's a link to Trading 212 in the description. Join through there, you get a free share. But the stock that I've been buying recently, or started a new position in, is a company called Lovesac. So yeah, absolutely belter of a name here. But yeah, it's called Lovesac. The ticker symbol is LOVE. It's on the NASDAQ and it is a 329 million market cap company. So it's a very small cap business. And as you guys probably know, what has happened to the small caps have been hit harder than the large caps. They've been hit bigger than the mid caps. These companies have been absolutely destroyed the most, and it's the same for Lovesac. It currently trades down at 7 times earnings, which obviously is looking quite low at the moment, and we'll have a look and see what's going on here. But you'll see here it's had a bit of a choppy share price. It was sitting around $20 going into the CV situation, and then when the CV situation happened, it went all the way down to $4, $5, and then it went on a crazy run up where it peaked around $91, and now it's sitting around $23 where it is right now, and that means it's very close to its 52 close of $19. So what is Lovesac or Love? It is a company that its historic business has been on is sacks. So these are like giant bean bags, if we can see here, and we'll have a look and click on one of these here, and they do look pretty impressive here. As you can see, I would not mind one if this company was in the UK, but it's just a US based company. So this is their traditional model, is a lot of these giant bean bags. And then what happened to the business is in 2017, they started building these sofas or sectionals. As you can see here, you can build up your own sofa by buying the separate parts and building it into a position you like. So you can have 4 here, you could add a 5th on here if you wanted, you could bend it around here, you could change the colours, whatever colour you want here. And when they added this in 2017, this was where the business changed and went into a massive growth spurt. Around 2017 and going into 2018, 2019, 2020, 2021, there's been a lot more growth in the business. And if you look here on the past performance, you'll be able to see here where the revenue was a little bit flat, and then we get the launch of these sectionals and you can see the big massive jump in revenue here, and they're moving a lot more into profitability, and this has been the big driver for the business in the last few years. They've also recently launched this stealth tech, which is also got the sound in here. This has been a really popular addition recently as well, and I think this is a big thing for Lovesac is they have launched these sofas here that are very customizable on the shape that you want it. You can add more in. You just go to the shop and buy more, and you can make your sofa bigger. You can change if you want an L shape in here. But the other thing is adding more and more features in here. For example, like the speakers into your sofa as well. Loads of optional options they can go down, further down the line for Lovesac. And when you look into the business here, this is from the recent SEC filings of the recent quarter. You can see here the growth is very much in these sofas. You can see the massive jump here from the sectionals, which has had the massive boom in revenue. You can see here the classic beanbags here actually isn't really growing that much. It is up for the year, as you can see here, but this quarter, the recent quarter, was actually down, and the growth is still very much here. You'll see here what is actually impressive is that other category as well is growing at pretty good rates, and if they can keep improving that, that'll be really good. Now, the other important thing is obviously the other parts is the things like the accessories that you have here. But what I really like about Lovesac is they're adding in a lot of new customers since they recently launched these sofas, as you can see here. And then what's happening with these sofas here is they're actually creating repeat business. So I've got an article here from Seeking Alpha. You'll be able to see that 41% is repeat customers, which is absolutely insane. 41% are repeat customers. That is crazy high for a company that delivers, sofas. Normally sofas are that kind of one-off payment, but what is happening is a lot of customers are purchasing their Lovesac sofas and then they're thinking, oh, you know what, let's add in an L shape, let's make it bigger. Or what they're doing is, as you can see, what these two people are doing here is they're changing the sofa. So we've got a brown sofa, let's change it to a darker sofa, a black sofa, and it's very easy to customize that. So that is so impressive. I like with this business is that I would not really be looking at this sort of company here, because I think there's not really much customer loyalty here, but the fact that this business is creating repeat customers is absolutely amazing. So if they keep attracting these new customers into the platform and then they carry on repeating and keep spending money with Lovesac, that's going to be absolutely amazing. So there's insane growth here going on with these sofas, and also the accessories is something that's really important, that's growing massively in this business as well. Now, the other thing I was worried about this business is the moat. A sofa company, what's the moat in this sort of space? Well, I have had a quick look down the patents assigned to the Lovesac company, and they've got a fair few, to be fair to them. I won't go through them all here. I think that'd be a bit boring, but you can get this information for itself. And I thought, how sticky is this? And actually, I was quite impressed to see that one of their big competitors, which is another sofa company, Lazy Boy, they actually tried to make a copycat of the Lovesac modular couches. So what we just showed you there, where on the website, you can design them, move them, and they actually went to go copy Lovesac's modular furniture that they had, and Lovesac won. So that was actually really impressive. When you look at the moat and say that they've got a lot of patents, but will them patents hold up? Well, it actually has as well. So I was really impressed to see there's a bit of protection there, that they've got a bit of moat around the technology they have. So that was also something that made me jump into this one that I might not have necessarily done if it wasn't for this little bit of information. So that was really positive as well. Now, Lovesac itself is doing pretty impressive things. If you look at the recent earnings, which by the way, this came out at $29-ish, and then since then it fell down to like $20. It had EPS, which was a beat. They had revenue, which was a beat by 17 million on 148 million, which was insane. And it posted 45% year-over-year growth, which, yeah, that's correct, 45% year-over-year growth, which is absolutely insane. And like we said, this is for a 7 times earnings company. Now, the only negative I did see in here was that the margins did get hit slightly, but still they're holding on pretty well, and we know there's a lot of businesses out there that are having their margins hit quite a bit at the moment, but I still thought they were okay. The other thing as well is I was a bit worried, are they going to have a bit of a slowdown because of the economic situation, inflation? Typically you'd go buy a sofa when you're moving house, the housing market's going to slow down. Is that going to affect Lovesac? And there's not really that much weakness that I saw in the recent earnings, so that's them little worries that I had kind of put away there. But that was one thing that was kind of on my mind when I was buying this one. So the recent quarter earnings looked pretty positive. And when you look at the company itself, like we said, it's just coming off a fantastic year or few years, which growth should continue at very good rates. The profit should continue at good rates. Looking at the financial health of the business, it sits on no debt as well, which is fantastic. Obviously generating good amounts of cash as well, which is great. And it was founded in 1995, and believe it or not, it's actually still a founder-led company. So Sean Nelson has been there. He is the founder, and he recently moved into the role of the CEO in 2017 again, which has been when obviously the turnaround of the business has been happening. And just to show how impressive this is that when we look at Lovesac here, the current year they're expected to grow at 31% this year, which is insane growth. Next year they're expected to grow at 19% because they cannot continue to obviously grow at these sort of rates. These rates are insane, but they're going to continue to grow at these rates, decent rates. And the way they're going to do that is by continuing to grow the showrooms. So I think they currently have, I think it was 145 stores. And I think next year they're looking, I think it was 25 stores that are looking to add next year. If you check the recent earnings call, it's got that information on there. I should have written it down actually before recording this video. But they're going to grow these showrooms, which has increased the revenue, as you can see here. And because they don't have many showrooms as well, obviously there's loads of room for them to carry on opening them showrooms. Obviously the other thing is that obviously the US base as well, you know, moving into other countries potentially could be something further down the line. And also you see here that the internet sales were actually showing pretty good growth. This comes off obviously fantastic numbers during the whole, you know, the whole CV situation. So I was pretty impressed there. So yeah, this is going to be obviously a lot of ways they're going to generate a lot more of the income. They also do get some from other, which can be like omni-channels and pop-up stores, so they could be a bit more volatile going into next year depending on what partnerships they have kind of in place. But yeah, the big thing is the showroom growth and expanding more and more showroom growth. But going back to the growth, you know, 31% this year. Next year, analysts are forecasting 19% growth. And it just puts it down at insane valuations. Like if we look down here, it's total price enter value to EBITDA is around about a 6. P ratio is a 7. On a total price entry value to revenue, it's a 0.6. And if we compare that to someone like one of their biggest rivals, which we just mentioned a little bit earlier, which is La-Z-Boy. If we look at these guys, for example, they're expecting to have 0.7% growth this year, and next year they're expected to have 0% growth. So when you look at this sort of business here, La-Z-Boy, if you look at the total enterprise value to revenue, it's about the same as what Lovesac is. And if you look at the total enterprise value to EBITDA, it's very similar to what, it's 1 less than Lovesac. If you look at the P ratio, it's 1 more than La-Z-Boy. So La-Z-Boy is basically trading at the same sort of valuation as Lovesac. But when you look at La-Z-Boy, they're a company that's just not offering any sort of growth. And then you've got a business here that's offering 31% growth and 19% growth. And it's just crazy to see these two stocks being valued at the same sort of rates. It's just absolutely bonkers. And even so, even when you compare it to, you know, La-Z-Boy, I think, you know, it should be this should be a premium company compared to its rivals. But when you look at the metrics, like 0.6 times sales, 7 times earnings for a business that's doing all these things, I think is pretty impressive. So a few weeks ago, I actually run a bit of numbers on it just to see potentially what the undervalued could be on this Lovesac. And I ran 3 different numbers. I ran 12%, 14% and 16%. I don't think they can obviously still grow at, you know, 30+%. I think that's going to come down in the longer term because that is just absolutely crazy growth. I think 16, 14 and 12% offer some room for error, and also potentially the one risk that I do see is that if there's a bit of a slowdown in the economy and they do grow a little bit slower, I think that kind of baked in there. I didn't put any share buybacks in because I don't think they will do just yet. And I put profit margins of 6, 7 and 8%. Now currently they do 8% at the moment. So on the conservative side at 6%, I thought that was quite a fair estimate. And I also put it trading at 20 times earnings because I think 20 times earnings is quite a fair valuation or metric for this sort of company. You know, if you're offering, you know, 12% growth, 6% profit margin, I think 20 times earnings is a very fair valuation to be putting it at. And in the next 5 years, it came out with 273% upside, 367% upside, and on the high side, 758% on the upside. So even worst case scenario, this was already starting to look pretty good to me from the numbers that I was seeing here. And obviously for me, in the next kind of 5 years, for me, as you guys know, I'm a long-term investor. I invest trying to get 100% return in the next 5 years. I see a lot of room, a lot of safety net there when I'm looking into this business, because I'm looking for, you know, 100% return in the next 5 years. And I think with this stock, when I was talking a little bit earlier about risk to reward, I look at the reward and I'm thinking, I'm probably going to get more than 100% from this investment. So I think there's a lot of room for safety. And moving into this space, I was a little bit worried when I was looking into it, like I talked about earlier, a little bit of concern about, it's not very a big moat business. There's not really normally a repeat business in this sort of industry. And I'm getting them things. I'm getting a moat. They've got a few patents on there. They've got the repeat customers, 41% repeat customers coming in. The valuation justifies me jumping in. The growth's, very, very impressive. So there is potentially a few little risks here. But then when I look at the reward side potential, I'm like, I'm going to have to jump into this one. So I did buy some shares into Lovesac last week. So I hope you enjoyed me sharing this information with you and some of the little bits of research that I've done on Lovesac in the last couple of weeks. Well, to be fair, it's a stock that I've actually been tracking for a good kind of 4 or 5 months. So this is some bits of the research that I've done over the last 4 or 5 months, and I thought I'd share it to you guys. So yeah, hope those little bits that I did put in there were a little bit useful, but I think it's quite an interesting company at the moment. And yeah, I started a position. So I hope you enjoyed me updating you and having that transparency as well with me sharing what I'm buying with you guys. And yeah, hit the like button if you found the video useful. If you're new around here, subscribe, and I'll catch you in a bit.